Hey, before we get started, I want to talk to you a little bit about our theme for this quarter, growing and protecting your portfolio. We're excited about various topics centered around this, but it really comes down to three concepts that will help you grow and protect your portfolio. You can find a PDF on our website about this. Go to wiserinvestor.com, scroll down to the bottom, enter your email address, and you'll get the PDF titled 3 Ways to Grow and Protect Your Portfolio. Thanks for listening. Welcome to a Wiser Retirement Podcast, where we cover financial topics such as retirement planning, tax planning, portfolio management, insurance, and estate planning. We should add cryptos to that. Yep. So you too can have a wiser retirement. I'm your host, Casey Smith. Guiding you to financial freedom is my co-host today, Robert Swarthout.
Good morning.
Good morning.
Thanks for having me.
Thanks for being here again.
Yeah.
Yours is a regular thing now. We're doing a podcast that's focused on digital assets or cryptocurrencies, at least once a month. So yep. This is our time. Now, this is coming right off our podcast earlier this week on should cryptos be in your investment portfolio, and I'd love to get your thoughts on this.
I can't wait to listen to that one and see what you guys said. You're going to hold me in suspense for 5 or 6 days here.
Right. I thought about it's like, maybe we should bring Robert in for that one, and then I thought, no, maybe it just needs to be the normal crew.
True, yeah.
And then you can listen and critique us.
I'm having that conversation. I wouldn't say daily, but certainly a couple times a week these days with people or friends of friends reaching out, and I just tell them, you have to understand how risky it is and make it a small piece of your portfolio. Yeah, it's kind of the elevator pitch, but it's there's all sorts of ways to go about it. You can follow the stuff, the meme versions of it, and almost feel like you're at a casino because that's really what it is. Yeah. Or you can try to focus on something that's, I wouldn't focus on a single one. I would focus on a small basket of things is what I tell people. If you're going to do it yourself, find the top 3, 4, or 5 that are not stable coins and just invest, something you can afford to lose, and, do it over time and just set it and forget it. This is a long-term bet. This is not something that's going to make you a millionaire overnight. Yeah. And that should not be the expectation.
So you're saying stick to like the Bitcoin, the Ether, stable coins are backed by US dollar.
Dollars or euros. I mean, they can be backed by different things, but yeah, focus on the ones that are not stable coins. And I say focus on those because in some ways those are the less risky, because they have the biggest following. The further down the market cap you get, the higher the risk goes up. This is an easy way to think about it.
Just like regular investing.
Yes.
You buy a penny stock, chances you lose everything, or it's never going to be above 5 cents.
Absolutely. And it's with crypto, it's not a company. It's very different. And it's like, there's not all these like metrics, like a PE ratio or dividend or any of that kind of stuff to think about. So it's like research is different. When I tell people I start my research on crypto Twitter, they look at me, especially people that are from traditional finance. They just like blows their mind that you would start your research on Twitter. Right. But that's where it lives these days. So it's just something to think about.
I mean, just in the last week, we have all this terrible things happening with Russia and Ukraine, and just started being Bitcoins donated directly to the Ukrainian army or military.
Yep.
So wow, that just skipped everybody.
Yeah, well, that, and it's interesting because it's, the amount of scams that I saw pop up over the last week saying, oh, this is the Bitcoin address for the army, or this is for certain things in the Ukraine. Like, you can't believe anything online. And like, the scammers are going to take every opportunity they have, and people are vulnerable right now. So
right.
It's, it's Bitcoin, it's Ether, there's different things being donated. And you're right. It's like, there's no way to sanction it, or like, like they're talking about cutting Russia out of the SWIFT, sanctioning them and cutting them out of SWIFT system.
For the most part, they have been.
They have been, right? I mean, and they go after the big banks to kind of do that. But it's
all the banks except for the oil ones.
Well, got to keep your car going, right?
That irritates me, but that's a whole different conversation.
But it's there's no way to really stop that. Sending something across the Bitcoin network. The question is, the Bitcoin that they're receiving needs to be turned into, or likely needs to be turned into fiat to be able to buy supplies. So that's where you need a bank, and that's where they can put the roadblocks in place to kind of really like clamp down on it. But maybe they can turn around and spin Bitcoin to buy some ammunition that someone else is willing to receive Bitcoin in. So the world is slowly changing here.
I'm sure there's someone out there that would receive Bitcoin for military items.
Well, the people that probably shouldn't be selling it potentially, right?
In the middle of war, I don't know that it really matters at that point. You just need something to be shooting back at the other side.
Yeah, exactly. Yep. So, but it's watching the crypto market in general over the last week has been interesting because there's been a run up, small, maybe 15, 20%, but largely led by Bitcoin. And there's a lot of speculation that it's maybe one or four or five different things. It probably has nothing to do with crypto and everything to do with the ruble in Russia going to functionally zero and people trying to get out of the ruble into something else. So there's that. There's also the Ukrainians worried about their currency and like all that. And, or people from around the world buying crypto to send it there. Because the market is functionally small enough for these kind of events to probably affect it. It's liquid, but not liquid enough to kind of disabsorb those kind of things. So it's been interesting to kind of see the theories. I have no idea, and no one probably can really prove it one way or the other.
And that's the part of it is it's not very transparent.
Well, it's 100% transparent and 100% not transparent at the same time. Yeah. Why people
you don't know who it is,
and what their
intentions are.
Yeah, absolutely. So,
well, it's to me, it's proving its utility, I guess. It's saying, okay, well, this isn't V-Bucks on Fortnite,
right?
Right. This is actually something that's going to be real. Mm-hmm. It's still developing, but even while it's developing, it's become useful to people in a very crazy situation. Because in the past, you'd have to buy gold, whether it be physical gold,
right,
or
something
that gold held away somewhere. Mm-hmm. And so now that those transactions are a lot easier.
Yeah,
I mean, I don't know what it's like to be in Russia trying to buy Bitcoin. I'm sure
there's a huge premium, I'm guessing, with a devalued currency for sure. It's the challenge. Gold, you physically have to be there. With crypto, you don't, but you typically need internet access to use it.
Yeah.
Right. Which has been a bit of a challenge in Ukraine. Like, they're worried about the internet coming down, and I saw that Starlink and Elon sent some stuff over there.
That was awesome.
That's really cool. That's not going to solve the whole country's problem. But,
no, it's not. But it just proves that Bezos, Musk,
and how much influence they have.
Gates, they're like their own governments. Yeah. If you think about it.
In some ways, they're bigger than many governments. Yes.
Yeah. I mean, you can have the SEC chasing down Elon over so many things, and he kind of gives them the middle finger, and it's like, what are you going to do about it?
Right. So it's crazy times. So,
well, let's move on to our normal topics. Why don't you give us a market update of what's happened over the last month?
Great. So today is March the 2nd, and we last talked on January the 26th, a bit over, I guess it's about 5 weeks. But Bitcoin was at 37,800 back when we last talked. Today it's at 43,679. Last couple of days, or this week, it's ran up a little bit. It was at 44, so it's kind of at its high, certainly over the last month. Ethereum was at 2,500 change, and today it's at 2,900, so roughly almost approaching 20% there. XRP was at 62 cents and is at 76 cents. Kind of just touched 80 cents the other day to kind of give you perspective. So the whole market's kind of gone up, but nothing dramatic in a crypto fashion. This is probably more of a equities type rally than it was a crypto rally.
Right.
But the total market cap back a month ago was 1.71 trillion. Today it's at 1.92. So we're inching back up. So it's, January was a bloody month. February was a sideways month with a little bit of this tail end where it kind of ran up a little bit.
So let's talk about a few things we've seen in the news over the last month. There's talks of the Biden administration proposing higher taxes on crypto. Why don't you kind of walk us through what's happening there?
Well, back before all this Ukraine stuff was happening, that was a bit of the news earlier in February. And it's just, I think it's a bit of like public negotiation going on there, in the sense that the government officials see these gains that are happening in crypto and they're like, oh, these people have so much more money, we should take it from them or tax them on it. I don't think that it changes personally. I think at the end of the day, it's going to follow something very similar to the short, long-term capital gains that it does now. I think, and this is just jockeying for position. Biden's talked about for a month and a half now that next week, every single week, it's rumored that he's going to release a executive order that talks about regulations on crypto. That's not happening. There's bigger things going on right now, obviously, but even before that, I just kind of didn't believe it. His executive order was probably going to be like, you guys need to work together. It wasn't going to be declaring anything that's of importance. So
why wouldn't they tax it any different than you would with currency? If you made money on a currency trade, why wouldn't they just tax it the same way as that?
That's a great question. That means that you believe a cryptocurrency, because it can be called a digital asset and different things, is actually a currency. Some of these probably act more like currencies than anything else, but others certainly don't act like a currency and act more like, I wouldn't say a stock, but a digital asset in the sense that it's something that's digital, that's represented on the internet, that you own. Like an NFT doesn't act like a currency, for instance. Like it acts more like a digital baseball card.
That's true. But you would buy that NFT for X dollars and sell it for XX dollars, and you have a gain. I guess that gain is what is that gain?
Right now it's short-term and long-term capital gains.
Okay, so it's treated just like anything else.
It's like a stock, yeah. I mean, there's been rumor that the G7, I don't know, even call it the G10, countries have been trying to come up with a consistent way to tax across countries for crypto. So it's not like you can try to flee to, find the 10 biggest can do that. And that's most of the people in the world. And most people aren't going to move to kind of get to lower taxes. Like I know a couple of guys at the end of last year that moved to Puerto Rico. They had made enough money last year that it was worth them uprooting their lives and moving to Puerto Rico because their taxes are so much lower on capital gains on that kind of stuff. So,
well, there's one country out there, the Bitcoin family. Or was it? Did it end up in Venezuela? Was it Venezuela? No, Peru. Somebody had no tax on crypto in order to entice people to come there and spend money.
Possibly.
It was a headline. I can't remember which country it was, but they were already on the move anyway.
Even Portugal has no capital gains on crypto.
It may have been Portugal.
Yeah.
It was a more developed country.
I'm going to say I wouldn't. Venezuela is a poor choice.
Right. No, it was more of a developed country than Venezuela for sure. But okay, so do you think that they see Bitcoin as a threat?
They being
the government, U.S. government, because if it gets too big, if it stabilizes, becomes too big, at some point you're basically doing business outside of the U.S. domain as far as our economic policies and how they manipulate policies for the good. To protect the country.
This can be a good thing, it could be a bad thing, but there's the U.S. dollar is sometimes used as a weapon, right?
Right.
If you can't use U.S. dollar, you can't do trade a lot of times. I mean, that's what they're kind of getting Russia over right now.
Right.
So there's times that I think that they're scared or concerned. I don't want to say scared, but concerned. And there's times that I think that they are so confident in what they have that it'll always be that way, which, reserve currencies lasts. I mean, we're kind of at the tail end of what the average reserve currency lasts. The British pound being the last one. The dollar took over after, I think, World War II.
Right.
If you rewind to summer of 2019, when Facebook was launching their Project Libra at the time, is what they called it. Then it became Diem. Then it's since been sold and kind of shut down. But they were talking about they wanted to make basically a Facebook stablecoin. They didn't call it that, but they were calling it Diem. That was a basket of U.S. dollars, the euro, I think the yen, and maybe a fourth one. And central banks of those countries or politicians in those countries did not take that kindly. Because Facebook's big enough where they can have enough reach where they could become basically the dominant currency.
Right.
And quite honestly, Facebook was just, in my opinion, when they did that, was just so cocky because they had trust issues with just their social platform. Why would people want them for money? And like it was almost going to cram it down their throats. And it was interesting to see that evolve. And then it kind of evolved to the point where like they just sold the assets off to like a bank in San Francisco and went on their own way. So, but back to your question, I think that some countries are more concerned than others. The U.S. Fed is not leading on that they are concerned, but they, part of the white paper that they released recently called Project Hamilton, they say they're looking into it. They've been looking into it for a long time. It's interesting that they just now released this publicly.
Along with MIT, correct?
MIT, yes, they're working on it together. So you take this kind of thing seriously. I think when they start working with academics and trying to understand the real technology that they need to have behind it, because MIT's got a lot of respect in that regard. But there's all these CBDCs being launched or trialed all over the world. Last I looked, it was like 75 countries were doing it in some form. Most of them are early trials, but it'll be interesting to if we can fast forward a year, 2, 3, 5 years and kind of see where we're at. It's moving much quicker. I mean, not to keep talking about Ukraine and Russia, but like there's talk of the BRICS countries kind of setting up their own money SWIFT type system to kind of get around sanctions, kind of do their own thing. I know, it's just. There's a lot of moving parts right now.
Right. So speaking of governments and having their own digital currency, India. Let's talk about India launching their own.
So India is an interesting case because...
India is an interesting case on a lot of fronts right now.
Yes, that's true. They've had a on-again, off-again relationship with regard to how they were going to handle cryptocurrencies in general. I've lost track. I want to say it's like 5 or 6 times they said they were outlawing Bitcoin, but they're really just talking about like crypto in general.
Right.
And then like months or weeks or something later, they would come back and like, oh no, we're going to be okay with it in this way. And they just kind of back and forth. And then mid-February, I believe, is when this article came out, but India is later 2022 or early 23. They're going to be launching their own CBDC. And they're thinking, at least my understanding of it is, they're going to be doing it so that they can help regulate crypto in their country better. So the crypto will be required to tie into it in some form. So, there's a lot of people in India that likely don't have a bank account. So this could be a big thing if it's used in the right way within that country, even if it doesn't, go outside the borders. So
what happens with, we talked about Project Hamilton, that's referencing the digital currency here for us in the U.S. So what happens when all these countries all have their own digital currency? It's really no different than carrying around the paper money, right?
Correct.
I mean, how is that a game changer for anything? Just because your country has a digital currency?
Well, you have an internet native currency at that point. At that point, you can do things online and like, at least the sales pitch that you get from the proponents of we need to help the unbanked is right now you can't use fiat on the internet because it's a physical thing versus a virtual thing.
Yeah.
And like a lot of these poorer countries, the people can't afford to use a traditional bank because banks charge fees, and these fees to be able to support banks are too high, and there's trust issues and everything else. So,
but for here in the U.S.,
our money's
I walk up
99% digital.
I go get a sandwich next door. I forget my wallet. I pull out my phone, do the facial recognition. I put it on top of the reader. I pay for my sandwich. And then at the end of the month, Amex auto bills my account and pulls the money out. I don't.
so where you probably don't feel the pain points now, but Amex is giving you a month-long interest-free loan.
Right.
They could debit your account once a day if they wanted to and kind of make you settle once a day. The whole idea of digital currencies in general, or one of the many ideas, is it's like instant settlement. There's no lag. Like when you go to, the gas pump and they authorize your card for $100, $200 these days, there's no reason why they could, in a fully digital world where they could connect in and say, okay, yes, there's enough money there. They're going to run it, and then it settles immediately, and they don't have that hold there for a day or 2 days to help it settle. I mean, again, in America and developed countries, money largely works very well right now. It's more the developing countries that are going to see the biggest impact, I think, from it. But you could even take it as far as a digital currency. We've talked about this, I think, in the past. Stocks, was it T+1, T+2 for settlement.
Right.
There's no reason why it couldn't be T+0 seconds in a digital world with crypto, and there's a bridge kind of between all that. So,
okay. Yeah. All right. So there's probably things in the background that we're not seeing that benefit.
And the analogy I've been using, people tell me, "Oh, I've missed the crypto run." I'm like, you have not. I mean,
right.
you missed the 1,000,000% returns potentially.
Right.
But if this is a baseball game, we're singing the national anthem right now. We have not even started the first inning. This is a multi-decade long evolution.
It sounds like the people who write the checks and float the check, and then it clears, and they put money in. That day's over.
It's coming pretty quickly. I mean,
I think it's already over. Actually,
yeah, the ACH system's pretty quick these days. But
the check float strategy. I actually saw something recently. I can't remember what it was, but it was from the 80s or something. It was talking about business transactions and managing the float. I'm like, I don't think there's a float anymore.
Yeah, at least in that part of the business, there's not. Yeah.
Okay, so let's shift gears a minute. BlackRock positioning itself to offer cryptocurrency trading. I thought that was interesting. I actually didn't see that. I'm focused on BlackRock for different reasons. I get frustrated with their ESG agenda.
Yeah.
As you see in all my posts.
Yes. But yeah, it was interesting. I assumed, not that I pay attention to BlackRock, but I assumed at some point all these big asset managers were going to get into the game. If I'm not mistaken, they are the biggest, crazy amounts of trillions of dollars.
Yep. They manage, they're managing assets from passive index funds, which is what we use them for, to actively traded funds all across the world. Very, very big organization.
But they, they announced that they're working on setting up a crypto trading desk. I'm guessing that will be to service internal clients at first, and then kind of maybe they would expand from there.
Using Aladdin, I noticed. Aladdin, so Aladdin's so IBM has Watson.
Okay.
So BlackRock has Aladdin.
Oh, okay.
It's like their supercomputer, right? And it can calculate all these things.
They all Disney characters too?
Yes.
Okay.
I know, I have no idea. Yeah, because what we'll do is we could get stumped on something. We can send it to our BlackRock rep, and they can run it through their Aladdin system and come back and say, "Okay, this is what Aladdin says about this particular allocation." It's pretty cool. We have access to that. The ESG part is not. I mean, I think there's probably baked into Aladdin somewhere, but that's Larry Fink. That's just all Larry's personal agenda that he's
pushing.
He's bled into BlackRock's empire.
I was surprised to see them being BlackRock being so soon, if that makes sense. Because again, there's no regulation on this stuff. Are they just setting up a desk and anticipating? I mean,
I don't know. I mean, I read the article when he sent it to me. It was a little vague, honestly, about it all.
And everything is vague right now.
I kind of saw it as, hey, this is what we're doing, and what's going to happen next. I mean, I guess I don't know. I would expect State Street to come out next and say they have a crypto trading platform, and then once
Schwab coming. I mean, they're all coming.
And then once it's all said and done, 10 years later, Vanguard will come out and say, they're launching a crypto. Vanguard's very slow. Vanguard's very slow to make big leaps like this. And I appreciate that because they take a lot of time to think and research it.
Yep.
Vanguard still has ETFs that don't exist, they don't have a commodity ETF. And it's because they don't believe that they can do that well or that it shouldn't exist at all. It's not good for investors.
A principal thing for them,
yeah. And so I pay attention to what they don't do sometimes.
Yeah.
Because everyone else is just hanging about the shingle, and if you can sell the widget, how much money can we make on it, right?
Yeah.
So I do appreciate that of their how they approach investing, but I don't know that I'm sure they have guidance. Vanguard probably has guidance on cryptocurrency but they don't have any offerings. So BlackRock's the first one I've seen of a
the
major
big ones. Yeah.
There's a platform called Onramp for financial advisors. Onramp basically connects with Coinbase and Gemini. Or is it Gemini?
Gemini, you did. Yeah, correct. Yeah.
I always thought it was Gemini, and then I watched this NASA documentary one time. They kept saying Gemini, like the Gemini program, and I was like, have I been pronouncing it wrong all these years? No one correct me. So the basically it's like the client has assets on those two platforms, and then Onramp is acting as a almost like a power of attorney, I guess, and they're trading or executing through those platforms. So the whole thing's very interesting. I've gone through a complete demo with how that would work with our firm if we added currency as an offering. And then obviously Ritz Wealth Management, huge outfit in New York, has partnered with WisdomTree to come up with their own index. So that's going to be available on Onramp only through advisors, not to individuals yet. So it's coming, but it's a little different because, and TD Ameritrade, Fidelity, Schwab, those are the three big platforms for independent advisors. Okay. So my opinion has always been, if you're not at TD, Fidelity, or Schwab as an independent advisor, there's got to be a reason. Maybe it may not be a good one. You might have a black mark on your record. Something's happened that you can't be on those platforms. Pershing is another one no one really hears about, but that could be one. Because if you have a really old school management, sometimes they'll be
on Pershing,
at Pershing because it's been around a long time. But like anybody else, it doesn't make any sense to me. Why you would not be on those three platforms. Now it's gotten a little more complicated because you've gotten Schwab and TD are now married and are merging together. So we're kind of really left with two big players, and plus Pershing. So what I find interesting is that none of those companies are diving into any of this
publicly.
Well, that's true.
I mean, like, I can't imagine that BlackRock's like, oh, this morning we're going to start crypto, and they announced it. Like,
but what's interesting, but see, those companies, they call firms like mine, like so many others that have, $50+ million in assets, saying, hey, come join our platform. Schwab's probably, you had to have probably at least 100 million at Schwab, but maybe it might be 200 now. But they say, come to our platform. And once you get to the platform, you're not paying to be on the platform. The client doesn't pay. We don't pay. They just want you to be part of their custodian platform because they're making money if you use a Schwab fund or Fidelity fund. TD Ameritrade, I don't know how they made money because they don't have their own funds, and I'm not paying them anything. My clients, of all the 300 families and $230+ million in assets, I think they made $1,800 on us last year. It's probably why they got bought out.
Yeah, probably.
And because there's no transaction costs of the funds that we use. So what I find interesting though is with Onramp, they want the advisor to pay $5,000 to be on the platform. So it's not, hey, come and launch our platform and we're going to, they make money some other way.
Yeah.
They're literally, to be the first is going to cost you the most.
Well, I mean, because they feel like they are helping an advisor solve a problem that they can't solve right now, maybe.
Possibly.
I mean, because realistically, you can't take client funds and go invest them in crypto for them right now in an easy way.
Not an easy way, no.
Right. So, I mean, they're kind of like your first, it could be your first, putting your toes in the water type thing. I don't know.
That was
just a theory. Yeah.
Yeah.
It's
going to be interesting to see how it evolves for firms and what firms want to do. I'm starting to see in disclosures now online. It's called an ADV, crypto policies. Like we don't endorse cryptos, or we do endorse cryptos, but you have to do it on your own. We don't advise on cryptos. So it's definitely changing the world in more ways than people realize, for sure.
Yep.
It'll be interesting to follow that and see what that platform is going to look like. I'm sure it's to be a test, to do the test pilot. I'm sure it's expensive at this point for all parties involved.
Yep.
Last thing, Denver Broncos.
Yeah,
I didn't realize they were for sale. Have you put an offer in?
I have not. No, not an NFL guy.
Well, you can't buy a college team,
right? There's guys that act like they can.
That's true.
So this one's a little different and kind of a fun topic to finish with. So in the crypto space, there's a what do you call this? A kind of like a virtual LLC. Okay, so it's called a DAO, DAO, and it stands for Decentralized Autonomous Organization.
So it's like
it is literally like an LLC on a blockchain,
like a co-op,
kind of. So LLCs have partners, or can have partners. It can be individual, obviously, but like the whole idea of a DAO is your voting rights are represented as, call them tokens, on a particular chain where that DAO is at, and they can span anywhere in the world. Like an LLC is, a U.S. construct, but a DAO can go anywhere across the internet. And there's a group of people that pooling money to try to buy the Denver Broncos. At the end of the day, there's like
how does that work though? Because who goes to the meet and greet and shakes hands?
Well, everything gets voted for in a DAO. So a DAO would vote up who they think their quote unquote president should be, or CEO, or those kind of things. I think there's like a -% chance here that the NFL allows this. Right. It seems like that's not going to work with the good old boys club. But it's just kind of like it kind of came across my news, and I was like, oh, that's interesting. We should quickly chat about that. But back in the fall, I'm going to say October, there was a DAO that raised, and I'm not joking, $25 million in an attempt to buy a one of the original copies of the U.S. Constitution or something like that.
Oh, wow.
And it was just kind of silly because, at that point you're, bidding wars are against people with a lot of money.
Right.
And, there was thousands of people that pulled their money, and they said what their goal was online, and how the max that they were going to raise was $25 million. If I'm not mistaken, the person that won the auction came in and bid like $25 million and 1,000.
Yeah,
and just won it. Like it was the easiest auction ever.
Just gave it away.
Yeah, but it was cool to see people kind of like rally around doing that. It was all based upon Ether in that case. So there was gas fees, people wasting a lot of money to get money in. Then they had to send money back, and people weren't getting as much back because of the fees. It was
right.
It was an interesting little experiment. But
they should have said their raise was $100 million.
Right.
Something ridiculous.
Yeah, people want to feel like they achieved a goal.
I guess so.
But if you don't win, you don't really achieve anything, in my opinion. But yeah, the Broncos, the DAO thing, likely not going anywhere, but it's something a little bit more real life in crypto to kind of talk about. So
how do these people network together? Like, it's not like you and me. So
I mean, it's friends talking to friends. It's the internet,
chat boards.
Yeah,
that's the thing.
Chat boards are probably not a thing. Probably Twitter.
Just dated myself.
Yeah. Twitter,
so some Twitter,
Telegrams, Discords.
Hashtag buy Denver Broncos and invest in this. And then obviously we understand how it's all recorded, right?
Yeah.
I assume that it's a digital contract as well.
It is probably a smart contract. Yeah. I mean, at the end of the day, it's a smart contract that has all these.
If we don't buy, then it goes, money goes back.
The DAO would vote on what to do with the money, I think. Okay. I mean, I didn't follow closely enough to know all those details, but that would be my guess. But it's, DAOs are all about voting. So there's the crazy thing is in crypto, a lot of times there'll be a new token will be started by a company, like a traditional, like LLC or, S Corp or C Corp. And their intent is to go out of business, in the sense that once the blockchain is up and running, it is managed by a DAO or a foundation or something like that, and the C Corp, LLC, whatever, dissolves and goes away, and then it is managed kind of like as a community versus a dictatorship type, as a company may be viewed as a dictatorship. So, yeah, new world coming.
Yeah, evidently. I'm still amazed by the NFTs, non-fungible tokens, and how much money is still being spent on those. And yet I still read articles that people call this the modern day tulip craze.
Yep. I mean, there's always people on both sides, and everyone wants to be right. There's always people guessing like when the market's going to move and all this kind of stuff. And realistically nobody knows. Some people may have a better guess than others, but
Right.
just I like to just enjoy the ride. So,
All right. Well, thanks for your time.
absolutely. See you next time.
All right.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening, that way you don't miss any new episodes. We would also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. We would love to hear from you. This episode was produced and edited by Lilton Moore. Wiser Wealth Management Incorporated is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.